Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and financial mumbo jumbo that companies put out there. Today we're diving deep into ANAVEX LIFE PEEP, a company that is trying to crack the code on some tough brain diseases, and their latest annual report is, shall we say, a journey. They're in the drug development business, so you know we are in for some excitement and maybe a few headaches. Before we get too deep, make sure you hit that subscribe button and the notification bell so you don't miss any of our reports. And hey, if you want to chat about this filing or anything else, corporate dive into our Discord community linked below. Alright, so ANAVEX is a company that is focused on central nervous system diseases, meaning they are looking for ways to help people with conditions like Alzheimer's, Parkinson's, and Rett syndrome. They're using what they call precision medicine, which basically means they are trying to tailor treatments to individual patients based on their unique genetic makeup. It sounds fancy and it could be game-changing if it works. They have a couple of main drug candidates, ANAVEX 2-73 and ANAVEX 3-71, and they are in multiple clinical trials. That is a lot of science speak, but what it means is they are deep in the very expensive and risky business of testing new drugs. Now let's talk about the big picture financials, because that is where the real story often is. First off, this company has lost a lot of money. Like a lot, they've accumulated a deficit of about $382 million. They also have no revenue to speak of. This is a huge red flag and something any investor needs to pay very close attention to. They candidly admit this raises a risk regarding their ability to continue as a going concern. That sounds scary, and it basically means there is a question mark over whether they can even keep operating in the future without more cash. Their total operating expenses were about $51.4 million in 2025. That is down a bit from 2024, which was $52.8 million. So yes, they spent a little less, but they are still spending a massive amount of money. Most of this spending goes into research and development, which is expected for a company like this. Looking at where that research money goes, roughly $16.3 million in 2025 was spent on external service providers. That is a significant chunk of change going to outside labs and researchers. It is down from nearly $22 million in 2024. This decrease is partly because they finished a big trial for Alzheimer's called the Attention Ad Trial. It is also because they've scaled back on manufacturing for their ANAVEX 2-73 drug. Then there is personnel costs, which is what they pay their own employees. That stayed pretty steady around $13.4 million in 2025. And they also have share-based compensation, which is basically the value of stock options and awards they give to employees. That jumped up quite a bit to over $7 million in 2025. Now let's look at their cash situation. At the end of September 2025, they had about $102.5 million in cash. That is down from over $132 million the year before, so their cash pile is shrinking as they spend money on trying to develop these drugs. It is important to remember that this cash won't last forever if they don't find a way to generate revenue or get more funding. When we look at cash flows from operations, which is the money they use just to run the business day to day, it is negative. They used about $39 million in 2025, and that is actually more money than they used in 2024, which was around $30.8 million. So they are burning through cash faster on their day-to-day operations. Where do they get the money to cover these losses? Financing activities. In 2025, they brought in about $9.4 million from selling stock. This is through something called an at-the-market offering, which basically means they can sell shares directly into the stock market when they want to. They also got a bit of cash from employees when they exercise stock options. It is a common way for companies like this to raise money, but it means they are diluting existing shareholders, which can lower the value of their shares. They have a big sales agreement with TD Securities, allowing them to sell up to $150 million more in stock. And they have that 2023 purchase agreement with Lincoln Park Capital Fund LLC that still has over $110 million available. This means they have ways to raise more cash, but it will likely come at the cost of issuing more stock. Now let's talk risks, because their report is full of them, and it is important to understand what could go wrong. They warn that their history of losses and no revenue means they might not be able to keep going. They could also be unable to raise more money, which would force them to slow down or even stop their research. The biggest risk is that their drugs simply won't work or will have bad side effects. Drug development is incredibly difficult, and most drugs fail. They also mention that getting approval from drug regulators like the FDA in the US or the EMA in Europe is a long, unpredictable and expensive process. And they have faced a setback with their Alzheimer's drug, where the EMA's scientific committee gave a negative vote on their application. This is a big deal. Another major challenge is competition. They face other companies that are also racing to find treatments for these diseases. These competitors might have more money and more experience. They also rely heavily on third parties for testing and manufacturing, and if those partners mess up, it could cause delays. They also worry that their research could become outdated if competitors develop better drugs, or if science changes our understanding of these diseases. It is a fast-moving field and they could be left behind. On the intellectual property side, they have quite a few patents and patent applications, which is good. Patents are how drug companies protect their discoveries. They have patents related to ANAVEX 2 to 73, which are expected to expire in the mid-2030s, but patents are complex and can be challenged. There is always a risk that someone could find a way around their patents, or that their patents might not be as strong as they think. Looking at the bottom line, their net loss was about $46.3 million in 2025. That is an improvement from over $52 million of operating loss, but still a huge loss. The per S-hair loss was $0.54. They're also dealing with some legal issues. There was a shareholder class action lawsuit related to disclosures about their Rett syndrome trials, which was dismissed, but is now under appeal. They believe they will win, but legal battles are costly and distracting. Now, the leadership, Christopher Missling is the CEO and has been there since 2013. Sandra Banish is their principal financial officer and has been with them since 2015. They are central to the company's operations. The company has a fairly independent board. Looking at executive compensation, the CEO Christopher Missling's base salary jumped from $700,000 to $800,000 in 2025. The CFO Sandra Banish's salary remains in Canadian dollars. A significant portion of their compensation is tied to stock options. They were granted a lot of stock options in March 2025. The CEO received options to buy 500,000 shares, and the CFO got options for 50,000 shares. These are performance-based options, meaning they only get value if the company hits certain milestones. All in all, ANAVEX is a high-risk, high-reward company. They are working on some really important diseases and have some interesting science behind their drugs. But they are burning a ton of cash, have no revenue, and face huge hurdles in drug development and regulatory approval. The fact that the MA gave a negative vote on their Alzheimer's drug is a serious concern, and they are appealing that decision. They have ways to raise more money, but it will likely dilute existing shareholders. Essentially, they need a miracle drug to succeed, and right now they are still very much in the race with plenty of hurdles to overcome. Investing here is a bet on them overcoming all these massive challenges and bringing a life-changing drug to market. That is our take on the latest ANAVEX filing. What do you think about their chances? Are they on the verge of a breakthrough or just burning through cash? Let us know in the comments below. If you found this deep dive helpful, please give this video a thumbs up and subscribe for more corporate breakdowns. And don't forget, join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.